Hello everybody, thanks for tuning in. Harvard House is using the power of social media and video to put you in front of your asset manager more often so that you can get the lowdown on what's happening on the market quicker and in greater detail. I'm sitting today with Michael Porter, Chief Investment Officer at Harvard House. Michael, I believe you're going to give us an update on BHP today.
Morning, Robin. Yes, I am. BHP is a company that's very well known. It's been listed for a very long time in South Africa. It used to be called Gencor, then it became Billiton, then it merged with BHP to become BHP Billiton. They've now dropped the name of Billiton and it's just called BHP Group. And now there's another change that really doesn't affect any economic part of the company, but it actually does have an impact on shareholders. And we just need to explain that and make people aware of what's coming. So unfortunately, Billiton operates under what's called a dual limited company structure. It might be familiar to a lot of shareholders because when South African companies moved overseas in the late 90s, Anglo, Billiton itself, Investec, quite often the Reserve Bank insisted that they have a dual company structure because of regulatory issues, exchange controls, those types of concerns. Billiton or BHP had exactly the same structure in Australia and London, so Billiton or BHP has always operated under this dual company structure. Over the years though, and if you actually look at the chart that I'm showing here, you can essentially see the current structure. You have BHP Limited, which owns all the assets in Australia, and BHP PLC, which is the London listing, and by implication the Johannesburg listing, that owns some of the other assets around the world. But over the course of time, things have changed. But BHP has changed. If shareholders have a long memory, they will recall that South 32 was split out from BHP about 5 or 6 years ago. That included aluminium smelters here in South Africa, some of the coal assets, the manganese assets. And so over the course of time, when the company started, the assets were split quite evenly between the limited company and the PLC company. Now that has become unbalanced. And actually the PLC company doesn't have many assets left. But because of the legal agreements between these two companies, which is very common in DLC structures, shareholders, regardless of which company you're a shareholder in, you share evenly in the profits and the dividends and the economic interest of the company. So BHP, we keep on calling it Billiton because old habits die hard, but BHP wants to move to essentially a simplified, unified structure, which is just one company, one shareholder register, and all the assets held in one legal structure. So that makes sense. So why are they doing it? It just makes sense to do it, Robin. It's time. As I said beforehand, a lot of the assets have moved around. Mostly they sit in a limited structure. A simplification lowers the costs. There's not a duplicate head office. There's not duplicate legal costs. There's not duplicate AGMs. All those types of legal necessities that the company has to go through at the moment. Importantly, it streamlines the dividend payments because at the moment the bulk of the dividends are actually earned in the limited company in Australia where the iron ore assets sit, and that's the real cash generator of the group. And then through a complicated structure they have to get the dividends to London into the PLC structure to be able to pay those shareholders. So if you actually have one company, then it simplifies the whole dividend payment mechanism. It makes it more efficient. It brings down the costs. Hopefully it'll increase the dividends over time as well if they can decrease the costs. Importantly, it improves their strategic flexibility. So at the moment, it's actually quite hard for Billiton to do an acquisition where they issue new shares to pay for that acquisition because you've actually got two different sets of shareholders. You've got two different share prices, which I'm going to show you in a moment. So this will increase their strategic flexibility. You will essentially have one price for the share globally as opposed to two prices at the moment. And importantly, they are remaining listed in Australia, London, and Johannesburg. So in terms of for South African shareholders who have enjoyed having BHP on the local exchange, that's not going to change. But the nature of the listing is going to change, which I'm going to talk about in a second. So if you just look at the chart of the two share prices, essentially these two lines should be identical to each other. This is the price of Billiton in Australia, the blue line, and the red line is the price of Billiton in London. Now, it's the same company, it's the same economic interest, they should be identical, but you can actually see that they're not identical. There's a Billiton in Australia often trades at a premium, and so by unifying the company, you'll actually essentially have one global share price, which makes it much easier for them to reference a price and then use their shares for acquisitions. And Billiton has done a lot of divestitures over the years. It's a pretty lean and mean company, but they too, with a very strong balance sheet, are looking to grow, especially into green metals. And I think this is a precursor to them getting their ducks in a row to unleash their growth strategy. So just in terms of the mechanics of unification, BHP PLC shareholders, which all our clients are, we shareholders in BHP PLC, you will receive one BHP limited share for every one PLC share that you have. So really, if you look at your portfolio, you're actually going to see no difference. You're going to have 100 Billiton BHP at the moment, and you're going to have 100 Billiton BHP next month. So from that point of view, nothing changes. It's just essentially changes from PLC to limited. The timeline, the shareholder meeting was yesterday. The resolutions were approved. The unification is going ahead, and it'll be implemented on the 31st of January, so essentially on the last day of the month. But the most important part of this whole presentation is essentially the implications that it actually has for shareholders, because you might, having listened to me for the last 3 minutes, you might say, well, that's all great, but I've still got one share for one share, nothing really changes. But unfortunately, it has two major implications. The first one is the index weighting. So Billiton will go from being essentially classified as a domestic share for index purposes to being a foreign listed inward listing share. And how the JSE works and how the indices are calculated is that the weighting, so Billiton's market cap, the weighting will be determined by how many shares are actually held on the South African register out of the whole total amount of shares in issue globally. And so Billiton's weighting could fall from roughly 12% of the top 40 at the moment to about 2 or 3%. Now, BHP are quite confident that obviously in Australia and other places there's going to be additional demand for BHP shares. So where you lose in one jurisdiction, you gain in another jurisdiction, and it should be pretty neutral on the price. But I just think that it's important for South African shareholders to realize that actually the composition of the top 40 is going to change, because if you take a company that has a very big weighting and reduce it by such a significant amount, then every other share in the index is going to have an increased weighting as a result of the rebalancing of that index. So things are changing a little bit from that point of view. The second major implication of the unification, unfortunately, and shareholders will groan when they hear this, is that it is a CGT event. So there are three reasons, or there are, I suppose, three factors where it might not be a CGT event, in terms of more than 10% of the shareholders have to be South African, more than 10% of the assets have to be held in South Africa. But BHP doesn't meet any of these criteria. Essentially, it's two foreign companies involved. Billiton PLC is a foreign company for South African purposes. BHP Limited is a foreign company, and none of the conditions for rollover relief apply. So when unification happens at the end of the month, it is a deemed sale, it is a deemed capital gains tax event, and so the price on the 31st of January will be the deemed sale price. That will then form the new price for the base cost going forward. So shareholders who have held BHP for a long time and who have accumulated significant gains will be impacted. And so I think essentially the last point is, how are we going to manage this? Well, there's two things we're going to use. This is actually an opportunity for us, Robin, to rebalance portfolios. Some clients have held Billiton for a very long time. The gains are significant, which is very gratifying. But this is an opportunity to rebalance the portfolio, to spread the exposure between Billiton and Anglo American, or Sibanye as another mining company that we like, because we're going to have to realize the gains in the first place. So this is an opportunity for us to diversify portfolios if they're not diversified already. And secondly, we have the whole of February to go through portfolios and see where we can minimize CGT by realizing losses in other shares. And the quantum of gains in Billiton can be quite large. Billiton's had a great run. It's trading at an all-time high at the moment, given where commodity prices are. And so we will be quite aggressive in looking for opportunities to reduce the CGT where we can.
Awesome. Michael, just a question. So in clients' portfolios, it's going to almost look like you sold BHP and bought BHP back in the same month. Am I correct?
Yes, that's exactly correct. And it'll show that there's a realized profit, but we haven't actually sold that. It's just the transaction going through and how we have to process it. But in some cases, you know, if you've had 1,000 BHP and you're too overweight, it might be that we actually do sell some and use that money to buy some Anglo-American or Sibania or something else that diversifies the portfolio. But you're quite correct. But in some cases, it won't be one for one because we'll use the opportunity to diversify.
Michael, you indicated that BHP was going to reduce its weighting in the South African index. I think currently it sits at about 12%, and you indicated it might go down to 2 or 3%. Is that going to have any implication in the share price?
Robin, I don't think so. Billiton itself have done a lot of work on this. Essentially, the loss in one index would be replaced by demand in another. So BHP is listed here in South Africa and London. That's the PLC. So the weightings will reduce in those jurisdictions, but it will increase dramatically on Australia. But because essentially it's the same company and markets are efficient, investors will arbitrage between the three prices and make sure that all three prices are essentially the same all the time. So we, even though South African shareholders might be overweight and they might look to reduce their weighting, Australian shareholders will be very underweight and they'll be looking to increase their weighting, and the market will arbitrage the price out. And so I don't think it will have a huge impact on the price. In fact, BHP themselves don't think that will have really a negligible impact. It's just that the shareholding register per se, I think there's going to be quite a lot of change in terms of who owns the company and how the shareholders are split around the world. But it shouldn't have an impact on the price.
Great. Michael, thank you so much for giving us your valuable time. Tune in and subscribe to our channel so that you can pick up regular videos from us and interviews with our fund managers so that you can keep your finger on the pulse of what's happening in markets globally. Thank you for joining us.
Thanks, Robin.